you very much indeed, Stuart. And our second expert is Dr. Graeme Wells, who's Associate Professor of Economics at the University of Tasmania, and he's the author of the Tasmanian Roundtable for Sustainable Industries assessment of the sustainability of the proposed pulp mill.
Thanks very much, Peter. I lecture still, I'm not retired, and one of the classes I lecture is actually held in this room. And one of the things that I try and get across to economics students is that when you evaluate a project or you look at alternatives, you want to look at all the alternatives. And so when it came to thinking about these economic costs and benefits of the pulp mill, I was rather surprised when the benefits that were claimed for the mill seemed to be so large. Because after all, what is happening in this project is that we've got an economy that's by and large fully employed. There are some people who aren't in employment who'd like to be, and they are probably people who are not well matched to the available jobs, but by and large we're in a fully employed economy. So if we subsidise a mill, it's likely to have costs in terms of pushing out other activities. So when I came to look at this question, I guess I thought, how could it be that the Monash University model had come up with such big numbers? Because I've actually worked on that model myself, and I've got a lot of admiration for the people who built it. So when I looked into this, however, the answer is that we get lots of positive goodies out of this mill, largely because we've restricted our attention to exclude a lot of the subsidies and exclude a lot of the costs that should have been counted. Now, it's fairly easy to exclude these subsidies because most of them are not subject to parliamentary approval. They come about because of, for instance, managed investment schemes in short rotation forestry. There is just a tax system in place, and the amount of subsidy that's involved depends on how many hectares of plantation get planted in any given year. So it's not something that Parliament ever approves as a dollar amount. You have to dig a little bit to figure out how big the subsidy is. Similarly, if Forestry Tasmania sells pulpwood to guns at a price that doesn't cover the cost of the alternatives, then that amounts to a subsidy, but it's not something that ever Parliament approves. So we don't really ever get a clear idea of how big these subsidies are. So I and a few other people tried to figure out how big they are. And on our calculation, the subsidy was about $850 million over the life of the mill. And that figure has not really been challenged by anyone in public at any rate. We had some criticisms, but I think they were fairly minor. The other reason that the mill looks so good is that it leaves out costs that should have been counted. So, for instance, whenever there's a hectare of plantation forestry put in, well, that leads to a cost in lost output from agricultural land. And that cost was never counted in the economic assessment. Our guess is that's about $400 or $500 million over the life of the mill, and so on and so on. And so our assessment was that really this mill is pretty much like a first-year economics student would expect, and that is that if you've got a fully employed economy and you count all the costs and benefits, then subsidising a mill will not actually be in the public interest, and so it turns out to be. So the details of all that are lots of graphs, lots of tables, but you can read them all for yourselves. We've done 3 reports now, and they're on the Launceston Environment Centre website. You can download them and have a look. The latest one I just finished today is on the Forestry Tasmania Wood Supply Agreement. And I might just finish by talking briefly about that. The heads of agreement were published a couple of weeks ago, and Bob Brown mentioned some aspect of them in his remarks, but I focused on the price side of that agreement, and it's a bit alarming. The agreement explicitly provides for floor prices, and explicitly it gives a forecast of what Forestry Tasmania thinks the supply price will be over the life of the contract. And if you look at that a little bit more closely, it turns out that these floor prices actually fall in real terms over the life of the contract. So the selling price for pulpwood now is very low, but the contract actually provides for that floor price to actually fall in real terms over the life of the contract. And the forecast price that Forestry Tasmania has also implies that it's forecast to fall in real terms over the life of the contract, which I think is a pretty poor deal from a taxpayer's point of view, let alone the environmental values that we might want to put on the sale of pulp. Now you might think, well, this is okay because the contract provides for 5 yearly reviews. So although it's described as a 20-year contract, it's really a sequence of 5-year contracts. And so then you might ask, well, what can we take into account in these 5-year reviews? And I guess my concern there is that the lost opportunities that Ben was mentioning in terms of trading in carbon credits are not explicitly mentioned as a subject that might be raised in these 5-yearly reviews, and nor is a rate of return to Forestry Tasmania. So I guess it's still open that these things could be included in the 5-yearly reviews because the final contract has not been reached. So it's my, as speaking simply as a Tasmanian taxpayer, my earnest hope, I guess, is that that sort of thing does get included in this final contract. It may have a lot of other deficiencies as well, but simply on straight perspective on the price of sale of pulp, it looks like a pretty good deal.